Hey, how are you?
Hey, Jeanette, how are you?
Good, thanks.
Are we all set and good to go?
Yeah, let's see. Let me just change my name here.
Sure. I'm going
There
to
we
share
go.
my desktop if that's okay.
Welcome to this presentation by Gene Marks, outlining the new Stimulus Act. The host associations for this program are represented here. Each is a member of the Association Education Alliance, a consortium of distributor-focused trade associations who work collaboratively to develop educational programs, including the University of Innovative Distribution, held each March, that are tailored very specifically to our members' needs. I'd like to introduce our presenter, Gene Marks. Gene is a past columnist for both the New York Times as well as the Washington Post, and he now writes regularly for The Hill, the Philadelphia Inquiry, Forbes magazine, and Entrepreneur magazine, as well as The Guardian. Gene has written 5 books on business management, specifically geared towards small and medium-sized companies. His most recent is Want More Cash? 100 plus ideas and strategies for increasing your company's cash flow this year. Nationally, Gene appears regularly on MSNBC and Fox News, as well as the John Batchelor Show and SiriusXM's Wharton Business Channel, where he talks about financial, economic, and technology issues that affect business leaders today. Through his keynote and breakout sessions, Gene helps business owners, executives, and managers understand the political, economic, and technological trends that will affect their companies, and most importantly, the actions they can take to continue to grow and profit. Gene owns and operates the Marks Group, PC, a highly successful 10-person firm that provides technology and consulting services to small and medium businesses. As Gene starts his presentation, if you do have questions, please feel free to add them in the chat or Q&A feature, and we will try to answer as many of those questions as we can at the end of his formal presentation. Thank you for being with us today.
Thanks, Joanna, for having me on, and thanks everybody for joining me today. First thing off the bat, I want you to notice I'm wearing my glasses today only because it just makes me look smarter. Okay, so whatever I'm telling you, hopefully it'll have that much more credibility because I'm wearing these glasses. I normally don't, but it's just more comfortable. We have a lot to talk about, today. And before I actually get started and go to my first slide, I just want to make sure that you understand what we're going to accomplish today and also how to get your questions answered. I've been writing and talking a lot about the whole stimulus bill. So there's a lot of material. There's a lot of stuff that's out there about it. I mean, it just passed at the end of December. So now it's, people are starting to unpack it. The goal of this hour is that you walk away with everything you need to know about the stimulus bill, the entire stimulus bill, not just not just PPP, but everything, and what impacts your business and what does not. So you can focus on what you need to know to see if you want to take advantage of some of the parts of this stimulus bill. There will be some parts of this presentation that will absolutely apply to you and you'll find interesting. And there will be some parts of this presentation that probably won't apply to you and you won't find interesting at all. All of the parts of this presentation have to do with business aspects. So I'm not talking about unemployment checks. I'm not talking about state funding. We're not talking about any of that stuff. We're just talking about things in the stimulus bill that impact businesses around the country. Now, at the end of this presentation, like Joanna said, I'll do my best to to answer some questions that you posed through the Q&A slide. But let me just tell you, I will be giving you my email address at the very end. Email me if you would like a copy of the PDF of this presentation, because there is a lot of stuff, and my goal is I want to get through it. That's my main thing during the hour that we have. But email me if you'd like a copy of the PDF, and honestly, if you have any specific questions pertaining to your business, your family, your friends, things that you want to run by me by email, go right ahead and email me. It's fine. It's what I've been doing really since the end of March when the first CARES Act came out. So I just want you to know that that Q&A is open for you. By all means, just consider it, me as a resource to ask questions. It's completely fine. There's no charge or anything like that. Okay. All right. So let's get started and we'll jump into it. I will try and keep this as straightforward as possible, but in all honesty, we're gonna dig into the weeds a little bit on some of these issues. So here is the first thing that we need to know. There is another round of the Paycheck Protection Program, but your business may not be eligible. So, as you know, there were already two rounds of the Paycheck Protection Program, one at the end of March when the CARES Act started, and then there was another one like in the early summer when the first round ran out of money. That eventually ended, and there was about $130 billion left over in PPP funds when the time of it ran out. Now we have another round, a $284 billion round of PPP money. You can use it for a first loan. If you haven't gotten a loan before, you can get a first loan. And even if you've had a loan before and you want to get a second loan, you can do that too. I'm going to explain to you in a minute. And finally, if you had a loan for under PPP and the because of the new rules that came out, the calculation that you used in your loan for the funds that you had available to you changed. You can go back to your banker and ask for more money under that existing loan, meaning that if you did the calculations and you were allowed a $10,000 loan and then new rules came out and actually it turned out you could have gotten $12,000, you can now go back and ask for that extra $2,000 from your banker if that is the case. So just making sure that we dig into this. So that, again, $285 billion have been authorized under this new round of Paycheck Protection Program. And remember, this is a loan. It is a forgivable loan program. You do not get it from the Small Business Administration. You get it from an SBA approved banker or financer. If you want to know who an SBA approved lender is, just Google SBA approved lender. You will see right at the top where you can go on the SBA's website to look at a list of their approved lenders. Now, just because the loans are available doesn't mean that everybody can get them again. The first time around, pretty much any business that wanted to apply for a PPP loan could apply and get it. That is not the case now. Instead of 500 employees at a physical location, you now need to have less than 300 at a physical location. Before, you could borrow up to $10 million. Now you can only borrow up to $2 million. Even if it's your first time in it, the maximum now is $2 million. Now, if you do want a second round of the loan, you have to provide evidence to your lender that you've used up all of the money in your first round. And that evidence can come through just an accounting of how the money was used. You have to apply for forgiveness. I'm going to talk about that in a minute. But you have to provide evidence to the lender through your accounting, through your cash receipts, your bank transactions to say, hey, listen, I got this loan. I did spend the money on all these things. That money is gone. And that's why I need to apply for a second round of PPP. Okay. Now, the calculations are still the same, and I apologize about the missing bracket there, but it's the same calculation. It's your last 12 months of payroll. So now this is 2019 payroll, right, and 2020 payroll now because we finished with 2020. So it's the last 12 months times you figure out your average monthly payroll based on that, and your monthly payroll, same requirements. It's your pay. People that are paid more than $100,000 annually, you can only go up to $100,000. In addition, like group health insurance can be included in that calculation as well. You come up with your average payroll for the past 12 months. You multiply times 2.5. That's what you're eligible for your loan, be it your first loan or even if this is going to be a second loan under PPP. If you are in a specific industry, you can actually get more. And I'm not sure how many of you guys in this group are part of these industry groups, but if for some reason you are, or frankly, and again, the purpose of this, talk to your friends about this or people in your community if they don't know. Basically, if they're in the restaurant or accommodation industry, instead of the 2.5 multiple, they can use a 3.5 multiple. So they get that much extra money to help out their businesses. Okay. All of these organizations are eligible for PPP. So again, pretty much all businesses and nonprofits, housing co-ops, news organizations, veterans, tribal businesses. Most importantly, if any of you guys on this call now are self-employed, if you're a sole proprietor, if you're an independent contractor in the industry, you can also apply for PPP just like you did before. Bear in mind, it might make more sense for you to apply for continuing enhanced unemployment benefits that are going through the end of March. That might make more sense for you. But if you want to apply for PPP, you absolutely can. And if you had filed for bankruptcy, you're also now allowed to apply as well. So just bear that in mind that those companies that were in bankruptcy are eligible to do that. Now there are specific companies not eligible. Any entities involved in lobbying activities, any of you guys, I mean, if you have any affiliations, meaning ownership, your co-ownership with entities from China, that could absolutely get in the way of you applying for a new loan. If you're registered under the Foreign Agents Registration Act, like you're a foreign-owned, wholly owned company locally, you might also have issues there. The Shuttered Venue Operator Grant Program has to deal with the arts industry. So people that are participating in that, they're not eligible. Publicly held companies are not allowed to apply for PPP loans in the second round, because we all know about the stories that happened in the first round with like Kanye West and Tom Brady and all celebrities and people that own publicly held companies that were getting not allowed anymore. And if you did start your business after February 15th of 2020, you are not allowed, you are not eligible for either the first or second round of PPP funding. The biggest limitation, though, that I have to warn you is a revenue test. Now, remember, if any of you got PPP the last time around, you didn't really, you just have to like kind of represent that you were impacted by COVID, right? So, and the rules were kind of like, loose about that. The rules have absolutely been tightened up now. Okay. You have to pass a revenue test. You have to show that there has been a 25% reduction of gross receipts or revenues in any quarter of 2020, any quarter compared to the same quarter in 2019. So if you had if you were off more than 25% in the second quarter of 2020 compared to 2019, the second quarter of 2019, you're eligible for another round of PPP or even a first round if that's the case. But you have to show at least one quarter in 2020 was off by 25%. Okay. Bear in mind that if you were not in business, in 2019, there's still a way that you can compare any quarter in 2020 to the last quarter in 2019 or whatever quarters that were in existence. So just in case you were worried about, I didn't start up my business till mid 2019 or the end, am I still eligible? Yeah, you still are. You just, if your second quarter revenue this year, you have to compare that to whatever operatable quarter you were in operations in 2019, and you might still be eligible for it. Okay. So all of those limitations are there. Targeted money going in for PPP. You can get a first or a second round. Same type of calculation, less of an amount, $2 million. But again, you have to show that you've been impacted by COVID. Okay. So that's like the biggest thing. I mentioned earlier when we started about this is about requesting an increase in your loan. Again, just to make sure you guys are aware, if you got a loan the first time around, let's say you got it back in April and you made it based on the calculations at the time of payroll. And then since then, there have been new rules that have come out, like they subsequently allowed you to include like group health insurance, for example. Well, if you think that like, hey man, when I did that original calculation, it was too low. I really could have gotten more money if I had known about these rule changes. If you think that's the case, you can now go back to your lender and say, can we recalculate the amount of my original loan? Because I do need more money. And if that's the case, then you would be eligible for it. So again, for any of these interim final rules that had come out, that's where you go. By the way, if you really want to get to the details of the rules and you want to dig into it, on the Treasury's website, treasury.gov, right on the homepage, will take you to PPP, and you can get into all the rule changes that have been made, as long as you've got a lot of time on your hands and a big bottle of Jack Daniels. Okay, so For those of you guys that might be in a seasonal business, I just want to make sure that you understand there are, because a lot of people are like, hey, my quarters are different, but based on the season and compared to the prior quarters, I don't know what I can use and what's eligible when it comes time to to do that. So there's just a new definition for seasonal employers. Okay, so if anybody that's not has operated for no more than 7 months in a year, okay, that's considered to be seasonal. Or if they earn no more than 1/3 of receipts in any 6 months in the prior calendar year, that's a seasonal business as well. And again, now that your loan calculation changes, it's 2.5 times the average monthly payroll cost, just like for everybody else. But you can use this 12-week period from February 15, 2019 or March 1st, 2019 that ends on February 15th, 2020, either one. Just to let you know, I don't know how many people in this group are actual seasonal. I know we're all distributors, manufacturers, so probably not a whole lot are seasonal, but just so you know, you can still participate in this. There's a new definition for you as a seasonal employer. Again, I will mention this again, but at the end of this presentation, you're going to have my email address. If you have a specific question, sometimes things like this come up and you want something more specific, you can email me with questions and I'll be happy to answer what they are. Okay. The other big part of PPP has to do with forgiveness. Okay. I mean, remember, these are forgivable loans. The whole idea of these loans is that you get them, then you spend your money on payroll and some other non payroll expenses, and then you can get forgiveness of the loans. And whatever hasn't been forgiven, say you got $100,000 loan, you put in, say, hey, I've got 90,000 of forgivable expenses, and there's 10,000 still left over. Whatever hasn't been forgiven, it's a 5-year loan. It turns into at a 1% interest rate. So it's pretty much like free money that you have for the next 5 years. Okay, so the forgivable expenses, the definition and the people that are allowed for it has been significantly expanded. So let's first of all talk about the expenses. Okay, the forgivable expenses, first of all, the ones that you're used to hearing about from before are still there. So you pick an 8-week period or a 24-week period. It's completely up to you. You then show evidence of your payroll related expenses, and your rent for any items, not just like property rent, but your rent for a forklift or a rent for machinery, or lease payments considered to be rent, cars, rental, business cars, rent, and mortgage interest. All of that goes into the calculation of what's forgivable. Okay. Now, 60% of those forgivable expenses have to be spent on payroll, okay, or payroll related expenses. The other 40% can be the non-payroll related expenses. None of that has changed. That's still the same when it comes to apply for forgiveness. However, there are now more expenses that are now falling under this definition of non-payroll related expenses, which should really, really help us make forgiveness. Okay. Number one, technology costs, like for your operations. So any expenses that you're paying monthly for, I don't know, Gmail, for QuickBooks, for your cloud-based applications, for accounting and for HR and for CRM, all of those things can now be considered to be forgivable expenses and included in the non-expense portion, that 40% portion of your calculation. If you were in an area of the country that was damaged, your property was damaged because of the public disturbances that happened back in the spring, you are also eligible. If you weren't covered by insurance, you're eligible for getting, you can include those expenses as a forgivable expense. If you're in a business where you entered into a supplier contract for materials before you applied for this loan, so you've entered into a commitment with your supplier, like a longer term contract, the expenses of that commitment are now forgivable, which is pretty wild. Now, this is really geared towards the restaurant industry. They got like perishable meats and stuff, so they got to make good on it. But listen, if you've got, again, long-term contracts with some of your main vendors or suppliers that you've committed to before, COVID took effect, before February, and you've got, these expenses here, these are also considered to be forgivable expenses. So you can consider that. And then finally, any worker protection stuff that you buy, and that's like everything. I mean, from the hand sanitizers to masks to plastic protection, anything in your office and company that you've done to protect your workers, whatever expenses that you've spent since March 1st of 2020 is what it's going to be. That is going to be, those are all forgivable as well. So just be aware, it goes all the way back to March. You can actually include those as part of forgivable expense, which is pretty awesome. Okay. These expenses, if you have an outstanding loan, first, second, or now the third round of PPP, all of that applies to those loans. These are all retroactive. They can go back to the beginning of when you got your loan. So that should really help you in your calculation for honoring the forgivable expenses rules. Okay. Just remember that the 60-40 allocation still does apply. So 60% of your forgiveness still has to be spent on payroll and payroll related costs. Okay. Now, the other huge thing about forgiveness is the $150,000 rule. And it's this: if your PPP loan, first round, second round, or now the third round, is less than $150,000, you pretty much get automatic forgiveness. There is going to be a one-page document that your lender is going to have soon, because the SBA is working on it right now, that you will have to fill out. And you're basically representing that you incurred all of your your forgivable expenses, and that you've restored your head counts from what they were back before February 15th of 2020. You're just going to represent that. And when you represent that on that one-page document that you fill out, you get automatic forgiveness. So in other words, you don't have to go through all the calculations. You don't have to show how you came up with the numbers. You don't have to submit documentation and go through that whole process. You don't have to pay your accountant to help you, and your banker will be relieved to hear of that as well. It's just automatic. You want to make sure that you keep your documentation around, though, for at least 4 years, because the SBA, has they have the option to audit you if they sense that there's any issues. So you want to make sure that you can still protect yourself. Okay. So you're gonna submit the certification. It's going to be 1 page in length. You're going to describe, give a description of the number of employees you're able to retain because of the loan. You're going to estimate the total amount of the loan spent on payroll costs, the total loan amount, and then you're going to attest that you've done everything that you've done to be under forgiveness normally if you were asked to do the calculation. And then that's it. The SBA is not going to ask for anything more. Now, if you have a loan above $150,000, you are going to have to go through the full forgiveness calculation. Okay. Now, people were asking about the requirement to restore full-time employees. Remember, you still need to restore your head count and your salary numbers from before February 15th of 2020. That was pre-COVID. Okay. When you end your forgiveness period of your loan, whether it's that 8 or 24-week period, you've got to show that you've restored them. Here, it's been forgiven. You can restore it anytime in 2021 is what it's going to, based on the forgiveness period of your loan. If for some reason you haven't restored all those employees, then you're not going to lose forgiveness. Your forgiveness might be reduced. And remember, you can restore. It doesn't have to be the same employees. It's just head count, and it doesn't have to be the same salary to pay to people. It's just salary levels, which can include bonuses as well. So just be aware, you're going to have to attest to that too. And again, the SBA can still audit you. All right. The headcount levels before pre-February 15th have become more flexible. They begin on the date of the loan that you get, and then it's from the 8 to 24-week periods after that, depending on whichever period that you chose. I don't know why anybody would choose an 8-week period. Choose the 24-week period. It gives you much longer time to not only incur these forgivable expenses, but also to restore your headcount. Okay. Finally, PPP forgiveness. A lot of questions about taxes related to PPP forgiveness. Okay. No more questions. You don't have to worry about that anymore. When your loan is forgiven, it's not taxable. So you don't have to pay any income taxes on it. And when you use your expenses to apply for forgiveness, all those expenses are completely deductible. So before this legislation, they were not deductible, and that was creating a lot of scary moments for people that would consider to have a tax liability. I don't even want to talk about this anymore. You're not going to need it. So loans are not taxable. Expenses used for forgiveness are deductible. It's a non-tax event on both sides. All this PPP, you got nothing to worry about. You should be worrying about other stuff. Okay. So let's sum up what we've learned so far. Okay. Number one, there's another round of PPP. you may not be eligible. You got to pass that revenue test. You got to have less than 300 employees at a physical location. You got to make sure that you're, not a publicly held company, that you started your business before February 15th of 2020, and some other things. So, there is another round, but you may not necessarily be eligible. So you've got to keep that in mind. Number two, if you have an existing PPP loan and the rules had changed while you were doing your thing, you can go back and change the terms of that loan and get more money. If you think that's the case, talk to your lender. Seasonal businesses are now fully defined, and the definition of forgivable expenses has been expanded. So now we can include other things like cloud computing costs and PPE equipment, and the costs if you incurred any problems during the disturbances in the spring that weren't insurable. You can include that as a forgivable expense. Any loans under $150,000 pretty much automatically forgiven. You just fill out a one-page certification form. And finally, don't worry about tax issues related to PPP. They're resolved. The loans themselves are non-taxable when they're forgiven, and any expenses that you use fully deductible when you go through that process. So that's what we've learned so far, and that's what has to do with PPP. Okay. Again, you have questions. If I have some time left at the end of this, I'll try and answer some of those questions. But again, you'll be able to email me. I'll give you my email address, and I can address your specific questions. All right. I changed this a little bit. I just want to be clear on some of the terminology here. Before I was saying like, hey, if you're a minority business, you can get help. It's actually I just want to kind of redefine that. It doesn't matter if you're a minority owned business. If you run a business that's in a low or moderate income area, you have special help that's due to you. Now, this is the definition of a low or moderate income area. It's basically where you're operating a business where the poverty rate itself is like at least it's at least 20% of where it is. That there's like 20% of the people in that area are below poverty wages, or if the median family income does not exceed 50 to 80% of that statewide or metropolitan median family income. In other words, if you're in one of those income areas where there were just poor people, frankly, and you're running a business there, there's help for you. More specific help for you. It doesn't matter what kind of business you're in, and it really doesn't matter if you're a minority owned business. It's focused on people in those low to moderate income areas. So be aware of the $284 billion that was set aside. $15 billion was put aside for initial PPP loans and $25 billion for second PPP loans for if you've got less than 10 people in your company, you're in a low to moderate income areas, and you can get a loan of up to $250,000. And by the way, how do you know if you're in that area? You got to talk to your lender. I mean, you're gonna have to do a little bit of research to see if you're in that area, and you got to talk to your lender. And believe me, there's no offense on the lenders, but some lenders know more than others as to what kind of area that they're in. But you're going to need to do a little bit of digging. And speaking of lenders, there's been $15 billion has been put aside for small community banks, credit unions, agricultural credit unions, and another $15 billion that's put aside for companies that are certified development financial institutions, development companies, minority depository institutions, and microloan lenders as well. My point being, like all these people, and you can Google these people, find out what are there locally, and reach out to them. They've not only had this money put aside to lend out under PPP, but to also use for their other programs and education and help or whatever. There's just been a big push in this legislation to get money out to businesses in low to moderate income areas. Again, it's regardless of what you do. You need to go and you need to talk to any of these financial institutions and see if there is money available for you. And then there are also special grants made available now under the Economic Injury Disaster Loan Program, which I'm going to get to in a minute. But anyway, special things set aside specifically for businesses that are operating in these low to moderate income areas. If you think that's you, and by the way, I'll get off this topic in a minute, but my clients, I'm mostly in the Philadelphia area. We have a lot of distributors and manufacturers that my company serves. And to be honest, a lot of them operate, in the inner city or in industrial areas and like areas that are without question in low to moderate income areas. And those companies themselves are geared, they can get that kind of help. So if you think that's the case where you are, you shouldn't be holding back. Okay. Now, I mentioned the EIDL program, which is the Economic Injury. I apologize, I have allergies. It's not COVID, it's just allergies. The Economic Injury Disaster Loan Program. It's alive and it's well, and there are grants available. So first of all, just a little recap on what this program is. So you know, this is the long-term loan program that you get directly through the Small Business Administration, the SBA. You go to sba.gov, okay? The loans themselves now, they're $2 million loans, and they're loans. They're not forgivable, they're loans, but they're fixed rate loans at 3.75%, and the maturities are 30 years, which means you can get like a $100,000 loan and it's like $400 a month for a payment. And all you have to do is prove that you are located in a disaster area affected by COVID. The entire country has been declared a disaster area. So pretty much any business qualifies for these loans. When you apply for this loan, you're entitled to a grant of up to $1,000 per employee, up to $10,000. And that grant program is still there. If you are located in a low or moderate income area, you can apply for a special $10,000 grant right off the bat that you will get regardless of whether you get an economic injury disaster loan, but you can apply through it through this program on sba.gov, just a 10,000 bucks that you'll get. And finally, if you have a PPP loan, you can also apply for an EIDL loan, an economic injury disaster loan. They are now being completely separated. Even if you get a grant under this program, you don't have to deduct it from your forgivable amount that's forgivable under your PPP loan anymore. It's all separate. It's separate, separate, separate. So this loan program is there and it's been funded. Again, so you can take advantage of it. $2 million loans, 30 years, 3.75% interest. By the way, if you're a nonprofit, it's 2.75% interest, all right? Administered through the SBA, $20 billion more has been allocated to this program. And again, you can get an EIDL even if you have a PPP loan. The grant's still there, $1,000 per employee, up to $10,000, still applies for most employers. But again, you no longer have to deduct that grant from your PPP forgiveness amount. That was an issue in the last round. And like I mentioned earlier, those companies that are in low to moderate income areas, you can apply for just a straight out $10,000 grant. Boom. They've got 3 weeks to approve it for you, the SBA. And then that, and by the way, one other thing I forgot to mention, if you're in a low to moderate income area and you got an EIDL before, and then they ran out of money when they were giving out grants, because that's what happened last time, which was kind of frustrating. Well, just bear in mind, you can go back to the SBA and say, hey, I was due $10,000 when I got my loan back in June, and you only gave me $2,000 because the money ran out. I want my other $8,000. They'll give you the $8,000. So if you were entitled to money before and you didn't get it because they ran out of money and you're in a low to moderate income area, go back to the SBA and they will give you the extra money and you can put that cash in the bank. So the EIDL program, it's back, fully funded. More grants are available under that program. Now, I'm going to spend just 2 seconds on this because there aren't that many people in the arts industry. But you know what? I'm only going to spend a tiny bit of time on this just so you know, in case you know anybody that's in the arts industry. Maybe you have kids that are in the arts industry, aspiring actors, talent agency, working in theaters, or people in your community. Maybe you participate on a nonprofit or you're involved in some way. I just want you to be aware, the arts industry, they started this new program, part of the legislation, called the Shuttered Venue Operator Grant Program. $15 billion has been allocated. All of these people that you see listed in the second bullet, I mean, motion picture theater operators, museum operators, performing arts actors, musicians, producers, basically anybody connected to the arts industry. If they can show that they got a 25% reduction in revenue in 2020, compared to last year, which shouldn't be too hard if you're in the arts, industry. And if you've got less than 50 full-time employees, they can get up to a $15 million grant. 15 million. I mean, it's initial 10 million and then a supplemental grant. So they got to use the money to pay for payroll and rent, utilities, PPE, but It's a grant that's available to them. If they participate in that program, they do not, they cannot participate in PPP. So if you know anybody in the arts industry, tell them about it. It's a great opportunity for them. Okay, this is a big one, and it affects. I'm looking right now. We've got like 300 people on this call right now. Okay, all of you are impacted by this. All of you can take advantage of this because there is a, I'm not, when I say secret, like a lot of people at the SBA are still getting up to speed on this, but I just did a whole podcast and a whole article for the Philly Inquirer on this, and interviewed a couple of senators behind this as well, including Senator Coons from Delaware. You need to be aware of this. Because of this legislation, there is this incredibly generous forgiveness provisions if you get, or even if you already have, an SBA loan. Now, forget about PPP, forget about economic injury disaster loans. The loans I'm talking about are what's called Section 7A loans, okay? And 504 loans. Those are the two biggest loan programs at the Small Business Administration. 7A loans and 504 loans, they're very similar in a lot of respects. You can borrow up to $5 million. You get the loan through an SBA lender, so it's not through the SBA. You can use the money for pretty much anything. You can use it for working capital. You can use it to hire employees. You can use it to buy equipment, buy buildings, buy a competitor, get more inventory. It's a loan for your business. You are eligible for these loans regardless of whether you've been affected by COVID. All you need to do is have less than 500 employees. You have to apply through the loan through an SBA lender, a bank that gives out these 7A or 504 loans. They will put you through some due diligence. You will have to show prior tax returns. You're like an existing business. You will have to, potentially have assets collateralized. You will have to show debt maintenance. I mean, as if you're getting a real bank loan, because it is a real bank loan. It's just that in this case, the government has increased their guarantee from 75% all the way up to 90%. And what that means is that now the banks have more incentive to lend this money out, because if the loans go bad, the government is backing them. So you're looking for a Section 7A loan. You can borrow up to $5 million, a 504 loan where you can borrow up to $5 million, or a 504 micro loan, which you can borrow up to $50,000. Again, you can use this money for working capital, inventory, property, business acquisitions, all of these different things. Now, these loans have been around for a while, but the forgiveness is what's new. And hold on to your seats, because here's what the forgiveness is if you get this loan. The bankers have been incentivized now. They're getting guaranteed 90%. Any guarantee fees, which can be kind of substantial, they've been waived. So you have to worry about paying any fees. If you have an existing loan, you will automatically get 3 months of your principal and interest forgiven automatically. If you are in an industry, which I get it, most of you guys aren't, if all of you guys probably are not in food service or entertainment or laundry, I don't know, maybe you are in food service. If you're a distributor or manufacturer in that industry, you can get an additional 5 months forgiven, which means you can get for an existing 7A, if you've already have a 7A or 504 loan, you can get up to 8 months of your principal and interest forgiven, $9,000 a month or $54,000, which is, did I say 54,000? No, $72,000. Look at me, the accountant who can't do math. That's a huge thing. If you get a new loan, you apply for the loan and get it approved before September 20th of 2001, you automatically get 6 months of principal and interest forgiven. So you want to borrow money? You're talking to your banker right now. You want to buy another business. You want to buy some equipment. You want to buy some vehicles. You just want working capital so you can have to hire some people or grow your business. Stop your conversation with your bankers. Talk to an SBA banker. Get one of these loans, a 7A loan or a 504 loan. You can get up to $54,000 completely forgiven your first 6 months of principal and interest. up to $9,000 a month. The whole purpose of this is that so that the stimulus bill is looking beyond COVID, and they're like, listen, we are going to be in a recovery sometime in 2021, hopefully by mid 2021, and businesses like yours are going to need capital to grow and expand and profit, and this is what's going to help you do it by giving you this giant incentive to get these loans. So talk to your SBA banker, 7A loan or 504 loan. Okay. So let's again recap what we've learned. We've talked about another round of VPP, but you might not be eligible. If you have an existing loan, you can request an increase. If you're a seasonal business, there's a different definition for you. Your forgivable expenses has now been expanded to include more stuff to make forgiveness easier. If you have a loan under $150,000, pretty much get it automatically forgiven. Just fill out that one-page form. You don't have to worry about taxes when it comes to PPP anymore. You can write off your expenses and you don't get taxed on any forgiveness. In addition, if you are, say, a minority-owned business, that's wrong. If you're located in a lower to moderate income area, you can get special help. Okay. In addition, the Economic Injury Disaster Loan Program is alive and well, and so are the grants along with it. You can still get the grants, and if you're located in a low or moderate income area, a $10,000 one grant, big grant, regardless of whether you get the loan, but you can apply under that program. If you know anybody in the arts industry, I know most of you guys are not, just be aware that these people get up to $15 million in grants for their businesses. And don't forget, Section 7A or 504 loans, if you have an existing one or you want to get a new one, big time forgiveness on principal and interest because of this legislation. You don't need to be affected by COVID to take advantage of them. Okay. All right. I do want to talk about taxes a little bit. Now, don't run away from me here because taxes are what? 30% of your income? You know what I mean? Like, it's not like it's like anything significant or anything, right? I want to make you aware of some of the significant tax things that have been done as part of this legislation that you want to make sure that your accountant is on top of because it impacts your business a lot. First of all, the employee retention tax credit. This is you. You're running a business, most likely a B2B business, and you've stayed in business throughout all of COVID and you continue to be in business. You've kept your people employed. Good for you. But if you've been impacted by COVID, just a 20% revenue shortfall compared to a corresponding quarter, you can get an enormous tax credit on the taxes that you're paying on behalf of your employees. It's called the Employee Retention Tax Credit. It's a credit. You can take this credit against your payroll taxes. And if the credit is bigger than your payroll taxes, you put the cash in your pocket. You can get the money back from the government. It's called the Employee Retention Tax Credit. The new rules, it expires on July 1st of 2021. It applies to anybody with less than 500 employees now. Before it was 100 employees. If at any point since February of 2020, your business has been shut down, per quarter. So if this quarter you get shut down for any reason because of COVID, you're eligible. Or if you can show this quarter that you've suffered a 20% revenue loss compared to the prior quarter of 2019 or 2020, you're also eligible for this employee retention tax credit. And let me just tell you how big a credit it is. The credit is 50% up to $10,000 per employee per quarter. So it's it used to be 50%. Now it's 70%, which means you can get a $7,000 credit for an employee that you paid $10,000 or more this quarter, if you're eligible, against your company FICA taxes. So it is, and again, if that credit is bigger than what you paid in FICA taxes, you can pocket the difference. You can take the cash back from the government. You can participate in this program even if you have a Paycheck Protection loan. You just can't use the same compensation money for the credit that you also use to get forgiveness under the loan. It does go back to 2020, so you can use it for the prior quarters of 2020. And now when you're calculating this compensation, group health insurance is included in that calculation. It's a rather complex calculation, but something you need to talk to your accountant or your payroll service provider to take full advantage of this employee retention tax credit. Now, You have to qualify for the credit, but you don't have to qualify for this. If you have been paying in Social Security taxes, you can now, and you've always had the ability, but just so we know, you don't have to pay them. You can withhold the company portion of your Social Security taxes, and you only have to pay back 50% in 2021 and the other 50% in 2022 with no interest. So it's effectively an interest-free loan if you want to keep the money in your pocket. And again, this applies to anybody. You don't have to show that you were impacted by COVID in any way. It is just it's just like, listen, things are bad. So through March 30th of 2021, say this past quarter that just ended or the next quarter coming up, you want to pay in your Social Security taxes, go ahead, don't have to pay them in. Stick in the bank somewhere, pay 50% back this year and the other 50% back the next year. And then you can have that cash available if you need it. So that's another big tax incentive. Okay. Next, the Families First Coronavirus Response Act, or the Emergency Response Act, right? It was up until the end of last year. It was required by employers to provide paid time off, up to 12 weeks of paid time off to any employees who were impacted by COVID. That was any employees, even if they didn't get sick, but if their family members got sick, if they had to stay home because their kids are getting schooled in virtual learning because of COVID, you had to pay them. Okay, that ended at the end of the year. Okay, however, there was a tax credit available under that. So if you did pay them, you could get the money back via a tax credit. This new legislation says to you, listen, you're not required to anymore, but if you want to keep paying them and allowing them to stay at home because they've been impacted by COVID, good for you. You're taking up on that option, and we're still going to give you that tax credit and make that available for you. So, not required as of the beginning of this year. However, had provided compensation to employees. This new tax credit is available this quarter through March 31st of 2021. If you do want to continue on with that, good for you. The Work Opportunity Tax Credit has also been extended. This has been around for a while, but it's especially interesting this year. This is a tax credit that you get. It's anywhere from $1,200 to $9,600 per employee when you hire somebody that's been long-term unemployed or on welfare or a veteran. Long-term unemployed is 6 months. A lot of people have been long-term unemployed. This year, you're going to be hiring some people as you grow back to where you were before COVID. Some of these people might have been unemployed for more than 6 months. When you hire them back, you can get a tax credit for doing this. So this tax credit was now expanded through 2025. Again, veterans, 6-month unemployed people, welfare recipients, and the credit available is $1,200 to $9,600 per employee. That's another enormous benefit that's part of this legislation that you need to be aware of. The other thing, I know this is a big thing for the president. The meals deduction has been increased. It's now 100% you can deduct all of your meals through 2022, designed to help restaurants out. So that's fine. And finally, charitable contribution incentives have also been extended. Now, this goes to you and your business, you personally, and if you happen to know anybody that runs a charity, or if you're involved, as a lot of us are, in different nonprofits. All of the charitable deductions that came into effect from the CARES Act have been extended through 2021. So now, people married filing jointly can now take a $600 charitable contribution over and above their standard deduction this year, 2021. So it's encouraging people to give to charities. And if you are, as a company, you can now give up to 25% of your company's taxable income in 2021 to charities and take a deduction for it. Before, the rule was only up to 10% you could take a deduction for. So that's an enormous thing. And then there's a higher cap if you want to give food donations to charities as well. You can now give 25% up to taxable income in food donations instead of 15% is what it was, all before. Okay, so a lot of stuff. And I'm going to wrap things up, and I'm going to take a few questions now. We got about 10 minutes left, but here's what we've learned, just to make sure we get the big points across. Okay, it's another round of PPP. You can get a first round, you can get a second round. It's only $2 million, not $10 million, and you have to show 25% that you were affected, right? Decline in revenue any quarter in 2020 to be eligible for this, can't be publicly held. So there's certain stipulations against it, but there was another round of PPP. If you have an existing PPP loan and you think you deserved more under it because the calculations changed, go for it and talk to your lender. If you're a seasonal business, there's a new definition for you to help you calculate what you're available under the PPP program. Forgivable expenses, if if you're doing that calculation, you've got a lot more included now, which include personal protective equipment and costs of if your business was affected by the disruptions before, and cloud computing expenses are all now part of that calculation. If you've got a loan for less than $150,000, it's pretty much automatically forgiven. You just have to fill out a one-page certification form. You don't have to worry about taxes when it comes to PPP. It's a non-taxable event, fully deductible event. And if you are located in a low to moderate income area, there are billions of dollars put aside specifically for you, but you've got to ask the institutions that serve you. The Economic Injury Disaster Loan Program is still very much alive and well and doing great, and there are plenty of grants existing underneath it. There are also special grants for the arts industry if you know people operating there. Don't forget Section 7A and 504 loans. As long as you got less than 500 employees, you're eligible. Get those loans if you're going to get any financing. Your first 6 months forgiven, principal and interest. 9 months or 8 months if you have an existing loan potentially. So that's all big things that you should be taking advantage of. If you've been operating like a lot of you have been, you have a big tax credit that you could be applying for called the Employee Retention Tax Credit. Talk to your accountant and talk to your payroll service provider about it. If you are still honoring the Families First Coronavirus Relief Act, thank you for helping your employees this quarter. You're not required to, but if you are, the tax credit is still available through March 31st. If you just want to not pay your Social Security taxes for your business, your employer's share, you can withhold it and then pay it in the future, 50% by the end of this year, 50% by the end of 2022. That it's the work opportunity tax credit. Again, bad item here on this slide. Work opportunity tax credit has been extended. Work opportunity tax credit up to a $9,600 tax credit that you will get. And the meals deduction has been increased, and nonprofits now can get more because you can donate more to charities and get a tax deduction for doing that. Now, I'm going to take questions by all means. So Joanne, I'm going to ask you to unmute yourself, right? And before I do, please guys note that is my email address. Email me if you'd like a copy of this PDF. I'll be happy to send it to you. I'm going to make a few edits to some of the tweaks that I need to make here, but I will send you a PDF. And also if you have just specific questions that I can't get to in the next 8 minutes, bring them on and I'm happy to answer them by email. So Joanne, back to you.
All right, perfect. We've got a number of questions here. I'll kind of toggle back and forth between chat and Q&A.
Okay.
One question from David regarding lobbying ineligibility for PPE loan by an association. Is that just federal lobbying or is it also state and local?
It's state and local as well. So it's not limited to just federal lobbying. My understanding is that it's any lobbying firm or they're just not eligible.
Gotcha. From Victor, revenue test. I'm a startup launched in March 2020 with 0 sales in 2019. Every month after March 2020, we had increased sales, mainly because we started a 0 and a month over month was not hard to beat. Our losses have increased in 2020 due to a slower launch, and we are far behind in our projections. What options do we have?
You have no options. You cannot apply for a PPP loan if you started your business after February 15th, 2020. I'm really sorry to say.
Gotcha.
It's a long, and I feel bad because that was a good, it was a good question and sounds like you're doing your thing, but it is what it is. Anybody who started a business after February 15th of 2020, you can't apply for a PPP loan.
For Muscle, we were hacked. Are expenses related to this hack included?
Unfortunately, they are not included for anything. I'm sorry to hear that you were hacked. The only thing that would be potentially included is just your ongoing payments for any cloud applications, not only just that you're using for your business, but also for security. So if you're using a cloud-based security application now, then you could use that for a forgivable expense. But if you paid your IT firm, 10 grand to, restore you and, get you back in action and all that kind of stuff, or even if you paid any ransom, none of those are included as a forgivable expense.
Gotcha. In regard to the 25% reduction calculation, is this based on accrual or cash accounting?
That's a really good question. It's based on how you do your accounting for taxes. So you can talk to your lender about this just to make sure, because in the end, the final decision is going to be with them. But it's based on how you do your accounting when you apply. So if you're an accrual-based tax reporter, then you would use accrual base when you're making the same calculation.
From Eric, can a sub S with cash accounting for taxes use accrual for PPP quarter-to-quarter calculation?
Same issue. It's how you do your accounting for your tax filings, what you want to use.
Yeah. What if we are currently more profitable than prior year, but we did have a quarter in 2020 where our revenue was down 48%? Do we still qualify?
Yes, you do.
Perfect. Is the non-taxability of forgiveness for both the federal and the state level?
Great question. That depends on your state. And it's such a great question because people are really concerned that, I mean, as you guys know, states are being crushed because of COVID. So they're suffering a lot of budget shortfalls. So there's a lot of movement among some states not to allow that deductibility of forgivable expenses. I think that'd be kind of cruel, but then again, they got bills to pay. So long answer is short question. It depends on your state that you have to pay attention to. Talk to your accountant.
Gotcha. From John, do we need to worry about larger banks running out of funds to lend for PPP, being as though small banks are getting a head start?
Yeah, I mean, it's possible. I don't know if you should necessarily worry about larger banks running out. I mean, you can apply to any lender. Even if you got an original PPP loan from Bank A, you can still apply to other banks or other lenders for money. So it's been spread around. And in all honesty, I think it's a good opportunity for you to start a relationship with another bank, and thinking that, a lot of credit unions as well are getting funding. So there should be nothing stopping you from reaching out to a community bank or a credit union for funding if you find that your larger bank has limited funds available.
Gotcha. From John, if your loan has not yet been forgiven and under 150,000, should you be making payments or payback? To pay it back in the meantime.
Yeah. So, I mean, it's a loan. And if your payment period is ended, if your forgiveness period is ended, then it becomes a loan, and it's not an option whether or not you should be making payments. The bank is going to be asking you to start making payments on it. So, we've been telling a lot of our clients to wait until this legislation came out before they start the forgiveness process. Now I can tell you it's time to start. If you're under $150,000, you're going to be getting this. The banks are going to be getting this document, this sign-off document, pretty soon, within the next week or two. So you should be talking to your banker now and preparing to do it. Worst case scenario, by the way, you do have 10 months to apply for forgiveness after the end of your forgiveness period. So you do have time. But if that's the case, you're going to have to be paying back that loan. And if you don't want to be paying it back, you should be going down the forgiveness road right away. One final thing, Joanna, I just want to also mention, I'm not 1,000% sure, but I'm pretty sure that the first year or two of the loans, principal payments are not required. So I think if you're paying back anything, you're paying interest on the loan only, at least for the first year. And if that's the case, it's a 1% interest rate. So it's not a super, depending on the size of your loan, it shouldn't be a super amount of money, but just bear in mind that would be the cost that you'd have to incur.
Gotcha. Question from Kelly. If we currently have a PP loan under 150K, will the second round be treated separately, or will this potentially put us over the 150?
Great question, Kelly. It's a separate loan. So these are two separate loans. So you have loan number one for 150K. If you apply for that second loan, my advice to you is to get that loan number one forgiven and off the books and done with. So you're only dealing with loan number two.
Okay. And we will do one more question.
No.
I'm sorry.
This is so much fun.
I know. From Pete, are the FFCRA credits capped at 80 hours per employee? And specifically, does an employee get 80 hours during 2020 and 80 hours during 21? Or is that 80 hours total across years?
It's the calculation itself is, first of all, it is capped at 80 hours, but the credit calculation itself is a year-to-year credit calculation. So you're going to get a credit for your 2020 taxes, and then it restarts again for 2021. So that's what the plan is for the calculation. I do have to tell you that that might change depending on what the IRS decides to weigh in on it, but we're telling our clients you've got 80 hours you're going to use for 2020, and then if you're going to continue into 2021, it's 80 hours for 2021.
Wonderful. Well, thank you, Gene, so much for this presentation.
Sure.
As Gene indicated, if you have any additional questions, he's available by email.
Yep.
I also want to let everyone know too that we have recorded this session, and tomorrow morning, those associations that have participated in this program will receive a link to the recording and also a PDF copy of the presentation. And almost all of our participating associations do, at least for a short period of time, have these recordings available to members in their on-demand section. So again, thank you to all of our AEA sponsoring associations, as well as to you for your participation. We will follow up tomorrow with an email that includes a link to a very short program evaluation. Your feedback about the programs we sponsor help to ensure we're providing you with content that is both educational and informative to help you with your business. So hope this was a good start to your week. And just again, want to thank you all. And this program is now concluded.
Thanks, everyone.
Thank you.